It's about that time, guys. We have five companies, five stocks to break down, all of which just reported earnings. And you know two of them, right? Apple and Amazon. Of course, you knew they reported today. So we have to break those down in this video. And we're going to go over Roku, Reddit, Airbnb as well later in the video, which they also reported earnings. So jam-packed video. Guys, hit the like button. Make sure to subscribe as the sun is beaming in my face right now. That's the bad thing about filming when the sun's going down. It's about what, 6:15 p.m. East Coast time. The way this room I'm filming in right now, it's positioned, the sun goes down and it hits you right in the face, especially during the spring summer when the sun's going down at this time. Either way, it's all good. Hit the like button, make sure to subscribe, follow along for more, and let's dive into it. So, the S&P 500 and QQQ, all the indexes for that matter, but we're selling off right now after the bell, after we got Amazon's earnings and Apple's earnings, and both of those stocks are going down. You guys can see SPY went up 0.75% on the day. It closed at 558.50, and now we're down to 556.80 in the aftermarket. And mind you, we saw a big dump in the last 10 minutes of trading. Look at this. SPY went down about 1% in the last minute of trading, more like 0.7%. Either way, close enough. And QQQ also went down a good chunk in the last 10 minutes. I don't really know why per se, but it is down even more now in the aftermarket. It closed at 481.68. Now we're trading at 478.85. So we're down an additional 0.5% after the bell. Nothing too crazy, but it is down after we got Amazon and Apple's earnings. So I don't want to spend too much time on these indexes. And man, that sun is literally right in my face right now. It's like I'm looking into the sun as I'm making this video. But let's just get into it, man. Apple is down about, last I checked, 2%. Now it's got to be down maybe more. It is down now 4%. Okay, so we're down even more. We closed at $213.30. Now we're at $204.40 per share. So let me pop up this article, which visually shows us their earnings quite nicely on CNBC. So let's come down here. There's Tim Cook. Shout out to Tim Cook, the CEO of Apple. So this is what we want to pay attention to, right? All the numbers broken down. Earnings per share came in at $1.65 versus $1.63 expected. So that beat. Revenue also beat, 46.84 billion. Or no, that's iPhone revenue. We'll talk about that in a second. Overall revenue beat, 95.4 versus 94.66 billion. So double beat for Apple, and iPhone revenue also beat, which is big. When we're looking at Apple, guys, iPhone revenue is at the top of the list in terms of what you need to pay attention to. So that came in at 46.84 versus 45.84 billion. So a nice beat there on iPhone revenue. Mac revenue came in 7.95 versus 7.77. That beat. iPad 6.4 versus 6.2. That also beat. But here we got some misses. We had let's see, wearables, home, and accessories revenue 7.52, which missed the 7.95 billion. So that missed. Services revenue 26.65 versus, let's see, 26.1 or 26.7, excuse me. That missed. So we had iPhone rev beat, Mac rev, and iPad, all those beat, but wearables, home, and accessories missed, and services missed. And gross margin came in right in line at 47.1%. And the thing worth mentioning is Cook provided Apple's first comments on the impact of tariffs on its business on the earnings call, with analysts saying the company saw limited impact in the March quarter because it was able to optimize its supply chain, but essentially they expect overall revenue to grow low to mid single digits on an annual basis during the current quarter ending in June. And I'm pretty sure Tim Cook said it's very difficult to predict beyond June what's going to happen with tariffs because, quote, he said, quote unquote, because I'm not sure what will happen with tariffs. Literally what I just said. So, not a bad quarter. Not too shaken up here right now with tariffs, but he said it himself. After June, which is literally next month, he's not going to be able to predict what to expect. And that is probably a reason why the stock is selling off due to the uncertainty here past June, which, guys, is only a month away. Newsflash, it's almost June. Yes, it's crazy. So that's a quick rundown on Apple. And Apple, by the way, is still very much in a downtrend, still trading in this channel. It has been for months at this point. And now that earnings are out, we're selling off $8, $9, $10 after the bell. It's pretty clear we're getting rejected at the top of the channel, at least as of now. So that's Apple. Let me pull up Amazon. Amazon's one that I personally hold. I don't own Apple right now. I used to about 8 years ago, but I don't own Apple stock anymore. I sold it probably, I don't even know when, but it was a while ago, and it's been a while since I've held Apple. But Amazon I own, and they reported earnings, and they did pretty well. The stock's down $5 a share after the bell. I believe it's because of light guidance is what I'm thinking, or not thinking, what I'm reading. So let me pull this up here and show you what's going on with Amazon. And by the way, guys, run the likes up on this video. Make sure to subscribe. Follow along for more content. I appreciate you all for tuning in as always. So EPS came in at $1.59 versus $1.36 expected for Amazon. So they beat EPS and they beat revenue, $155.67 billion versus $155.04 billion. So double beat for Amazon. And AWS missed, 29.3 versus 29.42 billion. That's a reason why we're selling off as well. And advertising revenue beat, 13.92 versus 13.74 billion expected. And Amazon said they expect second quarter operating income to be between 13 and 17.5 billion dollars, below the 17.64 billion consensus forecast. Another big reason why we're selling off, right? And the company expects sales this quarter to be between $159 and $164 billion, representing growth of 7 to 11%. And analysts were expecting about $160, $161 billion. So pretty good guidance there revenue-wise. But again, operating income, not the best guidance. And Amazon noted tariffs and trade policies and recessionary fears are among a range of factors that could make its guidance subject to change. Of course, that makes sense. And the company did not refer to tariffs in its forward-looking guidance last quarter. And the topic of tariffs, of course, is a major focus among investors this quarter, and Amazon faces significant exposure to the tariffs primarily through its retail unit. Amazon sources some products from China, which was hit with an aggressive 145% tariff as a result of Trump's overall tariffs. You guys obviously know that. And many sellers on Amazon's third-party marketplace, which accounts for more than half of the company's total sales, rely on the world's second-largest economy to make or assemble their products, which you guys know what economy that is, right? And some sellers have already raised prices and cut back on advertising spend as they confront higher import costs. So, yeah. It's definitely going to affect Amazon. We'll see how much. We don't know how much it will affect Amazon, but we'll learn more and more, obviously, as time goes on. So we are down about $5 after the bell. Not that bad. And mostly it's because of the miss there on cloud, little miss, and operating income guidance, not ideal. right? I'm pretty sure it was operating income. Yeah. So not the end of the world here. I think I'm probably going to buy more Amazon if it gets under 180 at some point in the future here. In the short term, I'm looking to buy some more. But overall, not bad. And the stock's holding up decently off the lows here. It's not like we're collapsing. We're only down $5. It's not a big deal. But yeah, that's a quick rundown on Amazon. Might as well go over the other couple here that reported. We had Reddit report. RDDT is the ticker. Reddit reported earnings after the bell. The stock shot up 20% initially rather. Then it tanked. It gave back that entire gain, and now we're starting to run again. I don't know what's going on here with Reddit, man, but it is on fire. Reddit reported earnings per share of 13 cents, which beat the 2 cents expected on sales of $392.36 versus $370 million expected. So double beat for Reddit. They see Q2 sales of 410 to 430 million versus 395 million expected. So very good guidance for Q2 out of Reddit revenue-wise. And anything else? Not seeing anything else. But yeah, that's a quick rundown on Reddit. The stock is starting to break. Good news, right? Hasn't really broken out since the middle of February. We've kind of been in this funk. So we're going in the right direction. We have a golden cross. I can't complain. I can't even, I'm at a loss for words. Clearly, guys, I can't even talk right now. So Airbnb, another one. This one reported, and it's down $7 after the bell. Oh, no, that's not good. The stock's down percentage-wise 5-6%. So Airbnb did earnings per share, let's see, 24 cents versus 23 cents expected on revenue of 2.27 versus 2.26 billion. So double beat for Airbnb. Looks like their guidance, they see Q2 revenue 2.99 to 3.05. Not sure if that is in line with estimates. Actually, it's right in line. A little bit lower on the lower end of that range. 3.03 billion is the guidance. But yeah, 2.99 is the lower end of the range. So a little bit soft there on the guidance. Not the end of the world. Revenue rises. That's good. Airbnb sees Canadians pull back on travel to the U.S. Okay, interesting there. So yeah, again, we are down about 5-6% after the bell. Pretty much continuing the downtrend that it's been in. It tried breaking out. We had a little bit of a pump fake there. And this is why I always say, wait until earnings. Wait and see how earnings look before you get too excited on a stock that's starting to break out, because earnings could change it all. And here we are. We're down, giving back a lot of the gains from the last couple of days. So last but not least, we have Roku, ROKU, which, yep, it's also selling off. Oh, man, not ideal for Roku here, which I've never liked Roku. Doesn't Kathy Wood own Roku? And I've been super critical of that. I just don't understand this company, why it's in anybody's portfolio, individually, that is. I mean, obviously you own it in ETFs. It is what it is. But if you're buying Roku stock, I just don't get it. Personally, and it's down 6-7% after the bell. Roku reported, let's see, earnings per share of the lost GAAP EPS 19 cents versus the loss of 26 cents expected. So that beat. And they beat sales 1.02 versus 1.01 billion. Not bad, but they lowered their guidance. Oh, man. Full year 25 sales guidance, they lowered it from 4.61 to now 4.55 billion versus 4.57 billion. So they cut their guidance there. Not ideal. So, yeah, I mean, Roku, I don't even want to spend any more time on this one. It's just, I mean, I don't get it. Kathy Wood owns it, but when I'm buying a stock for the long term, it needs to have a moat, a competitive advantage that I feel is bulletproof, that I think is rock solid. And I just don't see that with Roku by any means at all. And there's a reason, guys, reason why the stock has not done anything in years. In fact, it's down $40 from where it was 3 years ago, or about 45%. Not ideal, not ideal. So that's pretty much it for the video, guys. Fresh earnings from Apple, which let me take a look at what these stocks are looking like now. Apple's it's continuing to go down. Amazon, it's starting to creep up over 186 now. But yeah, let's see what tomorrow looks like, guys. As of now, futures are in the red, but we all know how quick that could change. Let me know your thoughts in the comments. Hit the like button. Don't forget to subscribe. Join the free email list. Check out my Patreon for my moves in my portfolio, plus more. That is linked down below. And with that being said, I'll catch you guys in the next video.